This is the Daily Market Comment by Rafi Bouyadjian. I'm Maria Pachurdes. Thanks for joining us at XM.com. Risky assets were either extending or holding on to their gains on Tuesday as investors awaited the latest inflation report out of the United States due at 12:30 GMT. After last month's bigger-than-expected drop in the annual CPI rate to 8.5%, there is even greater anticipation this time as inflation is predicted to have decelerated further in August to 8.1%. But whilst that could well mark a turning point in this inflation story, the fight against higher prices is by no means over as far as the Fed is concerned. Investors seem to be overlooking the forecast for core CPI, which is expected to have inched up slightly in August, having flatlined after peaking in March. Any unexpected strength, therefore, in the month-on-month change in one of these core categories could spoil the jubilance in the markets that's purely feeding on the hope that the Fed will slow down its tightening pace after September, even if the upcoming data is unlikely to stop policymakers from hiking rates by another 75 basis points next week. Shares on Wall Street closed up for the fourth straight day on Monday, as investors became increasingly confident that the inflation tide is turning. Although there is a risk that there may yet be more upside surprises in these CPI figures in the coming months, some traders are focusing on the fact that inflation expectations are also on the way down. The S&P 500 jumped by more than 1% to close above the 4,100 level for the first time since late August. The upbeat mood weighed on the mighty US dollar, though the safe haven Japanese yen recouped some losses against its major peers, helped by a drop in dollar-yen. The Australian and New Zealand dollars were struggling to hold on to their recent strong gains, but the rallies in the euro and pound were showing no sign of running out of steam just yet. The euro advanced higher while sterling broke above the $1.17 level. The focus in Europe right now is very much on how governments are trying to tackle the energy crisis. Even though there is a great deal of uncertainty about the likelihood of success of these emergency measures, they should nevertheless go some way in easing the pain on consumers and businesses. This was today's Daily Market Comment. Thanks for joining us at XM.com.